Happy Halloween from Hong Kong and welcome to this week's market update. The market ghouls were out this week as a rise in COVID cases spooked investors. Lockdowns returning to Europe and the United States is not at all surprising, and all the headlines on this will likely get worse as winter approaches. Again, as investors, I would encourage that we all ignore the headlines. US tech earnings broadly beat expectations, but worries on forward guidance and a fall in revenue of 29% for Apple in the Greater China region fueled investors' fears that China's recovery is more muted than reported, and pulled stocks lower in after-hours trading in the US on Thursday. Apple, though, indicated that initial data points for sales of the iPhone 12 are actually quite good, and it makes sense that sales would fall in the previous quarter as consumers hold off on purchases of Apple products as they awaited the slightly delayed new releases. The big bad wolf of sustainability, oil giant Exxon, announced a 15% cut in jobs, which investors were happy about, and the stock jumped 4%. Exxon has so far avoided investing into green energy projects, and a leaked internal memo outlined they expect their CO2 emissions to rise double digits between now and 2025, in stark contrast to other oil companies. Polls continue to tighten in the US election race, particularly in swing states. The incumbent factor is often underestimated by pollsters, and if President Trump can get within 5 percentage points of Joe Biden, I would view that as a neck-and-neck race into polling day. Contested election talk continues to grow. Now, if that occurs, markets will likely be even more choppy in the short term, particularly if stimulus gets delayed, as it will most certainly be needed. Again, I would urge calm, ignore the short-term hysteria, and look beyond it. There will be a winner, whoever it is, whenever it is announced. Certainty and stimulus should be positive for the stock market. That's all for this week's market update, and I wish you all a very